this now. There we go. I'm just gonna share my many screens with you. There we go. Yahtzee. And can everyone see that? No? Okay, obviously mucked it up. I'm going to share application screen. Oh, I pushed cancel. That's why. Okay, so here we go. These are our the examples that we came up with yesterday. So these were some examples of some journal transactions. The first one is to record the purchase of equipment with cash. On January 2nd, we recorded the purchase of food inventories. January 3rd, we recorded the purchase of beverage inventories. January 4th, we recorded daily food sales. And then on the 5th, we recorded cost of food sold for the week. So our journal is nicely laid out. It's good. They have reference numbers. They have dates. Our debits equal their credits. And they've got descriptions, so we kind of know what's what. Okay? So again, this isn't going to be a terribly exhaustive example because I want to get through this quickly so you can practice. But I'm recording it now so that after class, if you still have questions, you can go back and watch this video, and I'll make sure to post it after class. I've also posted last class's exercise to class 3, so you should be able to watch all. So we journalized. Okay, so I've skipped a step. Now our task is to transfer this information to the ledger. Okay, so if we go to the next tab over, the general ledger, we have our accounts. You see right here, it has an account name. This is our cash account. We also have spaces for a date, the description, the reference number for each transaction, the debit and credit column for the effect, and then we have 2 columns for the balance. Okay. We then have accounts for equipment, food inventory, beverage inventory, as we go down the list here, cost of food sold, and did I miss one? And equipment. And food sales. Yeah, I went a little quick. Yes?
Okay, so pretty much you see how in the journal we give 2 accounts to each entry?
Yeah.
So this is just us splitting them up pretty much?
Exactly. That's a good way to put it. So we're looking at each transaction in the journal. We're splitting up the 2 accounts that it affects, and we're showing the individual lines on the ledger in each specific account. So we go through the journal, we find all the transactions, all the lines that are affecting cash. We then collect all those lines and post them into our ledger. For example, let's start with the first one here. On January 1st, we are debiting our equipment by $3,500. Okay? So the reference number is 1, the date is January 1st, $3,500. We go to our ledger, we find equipment. Here's our equipment account, you see? This entire thing here, this little box, is our equipment account. We start to fill in the information. So January 1st, excuse my grammar, I'm typing with one hand. The description was we purchased equipment, right? So to record purchase of equipment. Okay, the reference number was what? 1? Perfect. And we debited it, right? It was a debit entry. So we put the 3,500 here. Okay, so just to make sure, double check. We've debited equipment by $3,500. We go over here, and that's exactly what's happened here in our journal. So check. Next, the next line down is we're crediting cash for $3,500. So the same amount. This is the credit side to this transaction. So same transaction, reference number, same date. We're just posting the other one. the other effect. So we go to our ledger, we find our cash account. We found our cash account right here. The date was January 1st, correct? There we go. The description was the same as this one, so I'm just going to copy and paste. Okay. The reference for this particular transaction was 1. There we go. And was it a debit or a credit post? Credit. So we put $3,500 in the credit. Yahtzee. Because there was only 2 lines to this transaction, we've now completely posted this transaction to the ledger. Check. Next transaction. So we go back to our ledger here. Okay, our next transaction happened on January 2nd. As a reference, the journal reference number is 2. We debited food inventory by 1,000 and we credited cash by 1,000. So now we're looking to post to the ledger only the first line here first. So food inventory, debit 1,000. So we go to our ledger. We find our food inventory right here, conveniently right under equipment. Okay, found our food inventory. The date was January 2nd, right? There we go. The description, I believe, was to record the purchase of food inventory. So to record the purchase food, I'm just going to put INB, there we go.
Which Excel you're using?
Sorry?
Like on my Excel, I didn't find the equipment. Like after the cash is.
Yeah, no, this is just an example.
Oh, okay.
Okay, the reference number was 2, and we were debiting or crediting it. Debiting it by perfect. Done. So now we go back to the journal. We find the next line in the transaction. So same date, same transaction, journal reference number. We are crediting cash by 1,000. So we go to our ledger, go back up to our cash count. We put in the date, January 2nd. There we go. Wow, filled it out for me. Perfect. We copy the description or just retype it in. I'm going to copy it because it's quicker. Here we go. There we go. Reference was number 2. And we're crediting by 1,000, correct? So we put in 1,000. There we go. So now we're starting to fill up some of our accounts. There's more than one piece of information going into our cash account right now. Let's go back to our journal. That particular transaction is now complete. We've now transferred both individual pieces of information to the ledger. So let's move on to the next transaction. On January 3rd, we've posted a transaction to record the purchase of beverage inventories. So we debited beverage inventories by $450, and we've credited cash by the same amount, $450. So we're going to work with the first line first, beverage inventory. We're going to debit it by $450. The reference number is 3, and it was on January 3rd. So we go to our ledger. We find our inventory, super close, it's right here, nice. We put in January 3rd. There we go. The description was to record purchase of beverage inventory. I put bev period for beverage in for inventory. If we're being technically correct, we should be putting in the full words. I'm just doing that because I have one hand on the keyboard right now. The reference number for this was 3. And were we debiting or crediting beverage inventory? We were debiting it by $450, correct? Perfect. Complete. We then go back to our journal, look at the second line. We're affecting cash again by $450. we're crediting it, and we have all the information to go back to our ledger now. Go back up to cash. The date was January 3rd. There we go. Let me go and just copy the description. I don't want to type it all out again. There we go. Go back up to cash. I'm just going to copy and paste the description. The reference still the third is still 3 for the third transaction, and we were crediting it by what was it, 450? Perfect. So now we've posted the 2 pieces of individual transaction information to their respective accounts. Go back to our journal here. And next we're coming to the next one, which is to record daily food sales. Now, because I don't want to make a liar of myself, I'm going to change this from $850 to $8,500. Okay, so 8,500. I'm just changing that number to make this example more realistic. Okay. So this happened on January 4th. It is our reference number is 4. We debited cash by 8,500, and we credited food sales by 8,500. Okay, so let's go to our general ledger here. Perfect. We're going to do our cash first because that was the debit. So this happened on January 4. And we're recording daily food sales. Okay, the reference number for this was 4. And we are debiting cash because we're increasing cash by 8,500. Perfect. Now we go back to our journal. The second item in this transaction was we credited food sales by the same amount, 8,500. Same transaction number, same date. So we're going to go find our food sales or food revenue. Where is it here? Food sales. It was January 4. There we go. And I'm just going to copy the description because food sales, copying and pasting the description. There we go. It was the 4th transaction, and we are crediting. We know we're crediting this by 8,500 because that's what our journal says to do. So 8,500. Perfect. Go back to our journal. We've taken care of both the debit and the credit for that particular transaction. Check. We will move on to the next and the final one. The next and final one is to record the cost of goods sold for the week. So this is the value of food that you don't have anymore because you sold it to guests to produce food sales or revenue. So this happened on the 5th. It is transaction reference number 5, and the cost of food sold was debited by $570. Again, cost of food sold is an expense. So we take that information, we go to our ledger, find cost of food sold, which is right here, start inputting the information. So January 5, 5th, there we go, and the description is to record cost of food sold. Okay, the reference number was 5. And we debited by how much? 570. Awesome. There we go. Now we go back. Morning. We go back to the journal here, and we are going to credit food inventory by the same amount, so $570. Because it's on the credit side, technically we're reducing our food inventory. So if we go to our general ledger, we go find food inventory. Right there. We put in January 5, 5th, and then the description here is to record cost of food sold. This was transaction reference number 5. And we are crediting it by $570. Done. We now go back to our journal, and that's it. We've successfully transferred. Well, we don't know if we've successfully transferred done it yet, but as it appears right now, it looks like we've taken all of the information that was in our journal, and we've posted it to the ledger. You see the process? We're just going line by line, and then posting it to each specific account. Now what we want to do is go back to our ledger. We're going to start at the very top. And what we're going to do is start to calculate the balance in each account. So we're going to take a look at the debits. We're going to take a look at the amount of credits. We're going to subtract the two and get the balance of the account. So here, on these two columns, we add up all of the debits, and on the other side, we add up all of the credits. And then we take the difference between the two, and that is the balance. So for instance, our cash here, because we only have one debit posting, the debit total is $8,500. On the credit side here, we have multiple credits in the cash account. So what we're going to do is we're just going to add those up. Okay, so we have a debit total, we have a credit total. We now take the debit total and subtract the credit total. So the balance for our cash right now is $8,500 minus $4,950 to give us a balance of $3,550. That is what's in your cash account right now. One person did it. Anywho, now we go down and do the exact same thing for each account. Except it gets, in this case, it's a little bit easier because in some of these accounts we only have one posting to it. For example, here in our equipment account, right? We've only have one effect in that, or posting to that account, and it was to record the purchase of equipment for $3,500. Because we have no credit information, like there's nothing in the credit column, the balance automatically becomes the debit, right? So here, our debit equals $3,500. We have 0 credits, so the balance is automatically $3,500. As we go down here, we have our food inventory account with multiple postings to it. This is one where we're going to have to calculate the debits, take the balance properly. So here, our total debits are 1,000. Our total credits are 570. If we take $1,000 minus 570, so we're just doing the subtraction here, we have a debit balance excuse me, of $430. As we move down here, we've got our beverage inventory because, again, there's no credit information and there's only one posting to the debit side. That automatically becomes the balance because 450 minus 0 is 450. We move down for food sales here. Again, because there's no debit information, the credit posting automatically becomes the balance because 8,500 minus 0 is a credit $8,500 balance. And again, a quick way to check to make sure you're posting these balances to the correct column is to ask yourself how or which column does this account increase on. For example, revenue accounts increase on the credit side. Therefore, any revenue account would normally have a credit balance. As we move down, we get down to cost of goods sold here, which is our last one. Cost of goods sold has a debit posting and no credit. So again, because that's the case, it automatically becomes the balance. So $570. That's it. So we've journalized, well, it was done for us. We've posted to the ledger. We've now taken the balance of the accounts in the ledger. Now what we can do is take these balances and post them to the trial balance. This is where we begin to see if our accounting information was inputted correctly. And I hope it was. So we go up to our cash account. Okay, we've got a balance of 3,550. Go to our trial balance here. Perfect. Because it was a debit balance, we put it in the debit column. What was it, 3,550? There we go. Done. We go back to our ledger. We go to our next account, which is equipment. It has a debit balance of 3,500. So we go to our trial balance, go to equipment. This might be a not updated. Here we go. Equipment. There we go. It had an equipment had a debit balance of 3,500. There we go. Go back to the ledger again. Find our next account, which is food inventory. It has a debit balance of $430. So we go find our food inventory, wherever it is. Food inventory right here. How much was the balance? $430. Debit balance of $430, so we include that in the debit column. Go back to our ledger. Next account is our beverage inventory. Is our beverage inventory. Our beverage inventory had a debit balance of $450. So liquor inventory, $450. Then as we move down, food sales had a credit balance of $8,500. So food sales, wherever it is, food sales had a credit balance of $8,500. There we go. Cost of food sold had a debit balance of $570. So we go here, find cost of food sold. There's cost of liquor sold. Bump, 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 bump. Cost of food sold right there. And how much was it? $570. There we go. $570. There we go. Go back to our ledger, and we've got no other information. So we have successfully, to our knowledge, transferred the information, the balances from the ledger to the trial balance. We then go to our trial balance. We add up the the debit column and the credit column. In this case, that was kind of already done for us here. And you will notice that the two columns equal each other. Your debit balance equals your credit balance. In this case, it's $8,500. Right? You balance. Check. And that is step 4 in the accounting center. It's a lot of movement. I can appreciate that. It's a lot of movement from recording in the journal to transferring that information to the ledger, to doing some quick math and stuff like that, to transferring to the trial balance. The reason for the movement is to ensure that our debits equal our credits and that the system has been followed. For example, here, both of our debits and credits match. This is great. It means that up until this point, our practice with our accounting practices have been good. Okay, so I'm going to stop sharing this now. There we go. Perfect. I'm going to stop recording.